What if beating the stock market wasn't about luck, predicting the future, or spending hours analyzing charts? What if a simple formula, one anyone can use, could consistently outperform most professional investors? In today's video, we'll explore 7 powerful lessons from the little book that still beats the market by Joel Greenblatt, a legendary investor who introduces a surprisingly simple investing strategy called the magic formula. This is Wisdom Lab. Let's dive in. 1. Great businesses aren't always great investments. Most people think buying shares of amazing companies automatically leads to great returns. But Greenblatt explains that's only half the story. Even the world's best company can be a poor investment if you pay too much for it. Imagine buying a luxury car for 10 times its actual value. It's still a great car, but it wasn't a smart purchase. Successful investing is about buying great businesses at attractive prices. Lesson number 1. Price matters just as much as quality. 2. Understand the magic formula. Now for the heart of the book. Greenblatt's famous magic formula ranks companies using just 2 factors. First, how profitable is the business? Second, is the stock cheap compared to what the business earns? The strategy looks for companies that score highly on both. Instead of chasing hype or listening to predictions, you let numbers guide your decisions. Simple doesn't mean easy, but simple often works. 3. Ignore market emotions. The stock market behaves like an emotional person. Some days it's overly optimistic. Other days it's irrationally fearful. Most investors buy when prices are high because everyone else is excited. Then they panic and sell when prices fall. Greenblatt reminds us that market emotions create opportunities. Smart investors stay calm while others react emotionally. Discipline often beats intelligence in investing. 4. Investing is a long-term game. Many people expect quick profits. But Greenblatt repeatedly emphasizes patience. Even the magic formula doesn't outperform every single year. Some years it may even lag behind the market. But over longer periods, consistency wins. The biggest mistake investors make is abandoning a good strategy too early. Wealth isn't built in weeks. It's built over years of disciplined investing. 5. Diversification reduces risk. Nobody can predict which individual stock will become the biggest winner. That's why Greenblatt recommends owning a basket of carefully selected companies instead of putting all your money into one stock. Diversification protects you when some investments disappoint. Think of it as building a championship team rather than relying on one superstar player. Risk management is just as important as finding winners. 6. Simplicity beats complexity. Wall Street often makes investing sound incredibly complicated. Thousands of reports, endless financial news, complex mathematical models. Greenblatt argues that complexity often creates confusion instead of better decisions. A simple, repeatable process followed consistently usually beats emotional decision-making. Successful investing doesn't require genius. It requires discipline. 7. Stick to the system. Here's perhaps the hardest lesson. Every investment strategy experiences difficult periods. There will be months or even years when your portfolio underperforms. Many investors quit right before the strategy begins working again. Greenblatt reminds readers that consistency separates successful investors from average ones. Trust the process. Follow your rules. Don't let short-term results destroy a long-term strategy. Patience is often the greatest investment skill of all. Let's quickly recap the 7 lessons from the little book that still beats the market. 1. Great businesses must also be bought at good prices. 2. Use the magic formula to identify quality and value. 3. Ignore market emotions and stay rational. 4. Invest with a long-term mindset. 5. Diversify to reduce unnecessary risk. 6. Keep your investing strategy simple. 7. Stay disciplined, even during difficult periods. Joel Greenblatt proves that successful investing doesn't have to be complicated. With patience, discipline, and a systematic approach, ordinary investors can make smarter financial decisions and potentially achieve extraordinary long-term results. If you found these lessons valuable, don't forget to like this video, subscribe to Wisdom Lab, and hit the notification bell. Because every great book contains ideas that can change your financial future. And here at Wisdom Lab, we bring those ideas to you in just a few minutes. Thanks for watching, and we'll see you in the next book summary.